Welcome to TheoTrade. This is Don Kaufman. It's December 21st, 2022. There are 2 minutes left inside of the trading session with the S&Ps ripping up some 55 handles. Is this the Santa Claus rally? Is this it? Is this all the markets can do towards the end of the year? I mean, look, the S&Ps are still down 20% on the year. Let's actually not just break down some of the trade today, because I'm going to tell you right now, it's light out there. Everybody realizes it's light out there. It's starting to feel a lot like holiday trade. The S&Ps are doing about 1.3, 1.4 million contracts. For those of you who do not speak S&P geek, I'll tell you what, to me, actually the trade doesn't really feel that much like holiday trade. It's decent. I mean, again, any day that you're doing close to, 1.5 million contracts in the S&Ps, it's a little bit lighter than normal, but we're still rocking. And again, the S&Ps, when they're moving 1.5%, trying to get that year-end rally going over here, but Santa may fall flat on his face, and I'm actually going to explain exactly why. Because if this is all Santa has to offer the markets, it's leaving a lot on the table. So the S&Ps are back up to the 3,900 level. For those of you that tune in to the weekend update, I was talking in extent about dropping back possibly into the volatility box. That volatility box being right in this neighborhood here. Extraordinarily dangerous spot. And that volatility box runs from basically that 3,800 all the way down to about 3,600. One of the comments that I was making as we come into the cash close here, but one of the comments that I was making with that volatility box, you have to be aware, you get down below 3,800 in the S&Ps, and all of a sudden we'll take off down. There is the closing bell. So you take off down to 3,800, and it's a fast and precipitous drop at that point right to 3,600. So we just eked out some gains from yesterday into today, bouncing just off that 3,800 handle. And again, a very, very critical level being tested at that 3,800. We bounced off of it. Nevertheless, I do have some cause for concern. One of the first things a lot of people will point out, volatility is down. Needless to say, volatility probably should be down because, the next week and a half of trade should see lower degrees of volatility. That, and I continually reiterate, this is like just, again, time and again, we've traded this level. This is highly traded, levels at this point, meaning that the market's not seeing any surprises, if you will. So think a little bit less about VIX as being an effective tool for kind of gauging risk in the very near term, because quite frankly, I just don't think it's great. Meanwhile, we are only a hop, skip, and a jump off the oh so important 39.31. You get back up to 39.31 in the S&Ps, and all right, then you might be able to stage a little bit more of that Santa rally. But lo and behold, and before I go into any more detail, on why I'm not all that wildly bullish, even with the S&Ps up some 60 handles, is some perspective here. If we take a quick glance at the SPX, which is the mother of all products in the SPX, this line through the middle of your screen, that's actually where we started the week. Well, I should say ended last Friday, but basically we started the week there. We have a very, very mild bid in the S&P. So you start the week somewhere just north of 38.50-ish. Here we are at 38.78. Yeah, the S&Ps are actually up on the week, but it's pretty nominal. One of the things that you want to keep in mind, and obviously we're through Wednesday already, we have still the ability to move plus or minus approximately $87 on the week. And again, perspective here. What have we done thus far? Absolutely nothing. On the other hand, and I do want to show you the other hand of this, let's actually drop into the QQQ and bring up auto expected moves, because this in the Nasdaq tells a very different story. The Nasdaq is still technically down on the week, and I want to reiterate that. Nasdaq is still technically down on the week, and why do I have that cause for concern? The Nasdaq finished just mildly below on a percentage basis the S&Ps. But to get very, very specific, the area of weakness in the Nasdaq is very specific. Got to be looking at Apple at this point. Obviously, Tesla is the obvious one. Tesla continues just to break lower, okay? Continues to kind of diminish off into the sunset. You know, Tesla at any point, though, it could have just this rip and spring back to the upside. We just haven't seen it yet. But Apple is far more disconcerting at this point. And I want to show you now a 3-year chart. Now, listen, I'm not much of a market technician. I am much more the quantitative trader. Okay, the first thing to point out, all right, is holding the 130 level inside of Apple is critical. Not just today, not just tomorrow, the remainder of this week into next week, because breaking under the 130 handle inside of Apple, okay, I believe will actually take Nasdaq into new lows. That's some of the recent lows where if you do take a look at Nasdaq, or maybe more appropriately, we'll go to the QQQ. Qs will actually drop possibly back in and around the 260 level and even breach into, again, some new lows. If the Qs are going to break, it's going to be done on the back specifically of Apple. But Apple, it's right there. Again, Apple's got just a mild bid between yesterday and today, but Apple actually touched right into the 130 handle, and I think it's critical. Losing the 130 handle inside of Apple, it's an easy, an open break down to the 120 level. You lose 120, it's complete free-for-all between 120 and $100. And it would actually start to systematically kind of dismantle, if you will, NASDAQ. So again, you know, is this all that, you know, the Santa Claus rally has to offer the markets? Again, it's leaving a huge amount of risk on the table. And even though Apple outperformed specifically today, okay, in terms of the rally, I still have some pretty significant reservations, because at this point, this just looks like a mild, again, kind of, you know, huge sell side activity, a little bit of a bid back before we actually kind of retest into that 130 zone. We'll see. We'll see actually what this thing is going to hold. Back over to Tesla for just a moment. Tesla continues to kind of forge into new territory to the downside. For those of you not aware, open up like a 3-year in here. Okay. Somewhere right in the neighborhood, we're presently trading right around this 135. We probably do have, at the very least, degrees of support, maybe meander around here for a while. Nevertheless, okay, we'll look for Tesla to explode back higher. Now, that would be, if you would, a bit of a bullish connotation for the NASDAQ. But again, put against Apple, well, Tesla, you know, just pales in comparison in terms of the magnitude of the move that Tesla can actually, you know, actually pull, if you will, the entire NASDAQ back up to the upside. It wouldn't be enough. Okay, not even nearly enough against Apple. Again, Apple probably, as I said, the most disconcerting stock in the, not only in the Nasdaq, but specifically inside of the S&Ps. Mega market cap like this, okay, testing that 130 handle, it's absolutely critical. Last, but definitely not least, on this evening's video, one of the things I've been looking at a lot, okay, some home builders. Most of the home builders have actually had a pretty rough year. If you take a look specifically at Home Depot, and I'm picking out Home Depot because performance, okay, versus the rest of the sector, it's actually fairly good in Home Depot versus the sector. But performance in Home Depot, just as of late, it's got a nice bid back under it from being down upwards of 35%. Nevertheless, this might, okay, make for a decent opportunity in the days to come. If we get a little bit more of a bid back under Home Depot, we may be able to embark upon a short position, possibly even use a little bit more of a duration position in Home Depot, which is something we've done in the past. Again, Home Depot on a rip to the upside. And here's the reality, and one of the reasons I'm looking at this, if you take a look at the exact same time frame and you bring up TNX, Okay, TNX happens to be none other than the interest rate in the 10-year. 10-year right now is on a little bit of a bid back under it. If the 10-year is to continue a bid, hits for instance 4%, I think they're going to put a lot of pressure into anything home builder related. So keep that one in mind. Again, the last thing I'll mention, I'll jump back to the SPX here on this evening's video, and I'll reiterate. Okay, look. I know that everybody's anticipating some holiday trade. And as I said to begin with, things look just a little bit lighter. Only by, 100, 150,000 contracts. Okay, we've lightened up a little bit. But there's still, okay, a tremendous amount of gamma risk in each and every week that we've entered into. We've seen this just huge gamma risk into the end of the week. And this is no different, okay? You don't need a lot of size. You don't need a lot of volume to move markets, especially we haven't done much on the week. This huge amount of gamma risk, this ball of risk sits right here in the middle. So the slightest move, either higher or lower right now, can get that ball moving. Keep it in mind as this week progresses. Listen, just because there's not a lot of volume, okay, doesn't mean that the S&Ps can't start rocking one side or the other. Algorithms are just that. They don't know it's a holiday coming, okay? And you can get some decent sized market momentum over there. So at this point, this is all Santa is gonna give us, 60 S&P points. Again, a number of key stocks and key constituents to the S&P 500 are they're just on the rocks right now. Keep it in mind in the days to come, specifically that 130 level inside of Apple. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.